Okay, guys. I did a video earlier, and I did only briefly talk about the S&P 500. But if you see my past videos, you know that I've been talking a lot about this being a very, we could see a big correction, right? Now, at the moment, we're really looking for evidence. We're trying to build a case to support our theory, right? And I don't want to spend too much time on this video, so I'll pretty much get straight to the point, right? Now, we're building a case for entry. What are we looking for to give us evidence that we're going to take this short, right? So we know we've got a lot of resistance, right? That's been talked about. We know we're heading into a major structure level of a historical high, which is another indication. If you want to look at it from an RSI perspective, then we've got RSIs being overbought, right? We've also got some negative divergence, right? So this is telling us that we're going to see some correction. So that's already 4 signals there. Now, another signal you can look for is reading previous price action, right? Because it does give you a lot of clues in terms of what might happen. And if you looked at my previous video, I talked about this little support area here, right? This is a very important support level, and so far it's acted as that so far, right? We see the market every time it's come back down to test this level, you get this push back up. And these are all, we're seeing a lot of selling, but towards the end of the day, pretty much the last hour or so, you see the market, the buyers coming to push this back up. And that's happened for 4 consecutive days, okay? So most people will look at this and they'll say, oh, this looks pretty bullish. We might see some continuation, which is fair enough. They want to see it like that. But when I look at previous price action, right, you can see that the previous 2 big sell-offs, the one in August and December last year, the market did something similar. We had some strong support here. We had a big push up following a big sell-off, right? We had the same thing here too, big push back up there. Now, what happened next, right? What happened next? Well, most people that bought here and saw this red candle, they probably would have been thinking this is just a correction. This is just a retracement. Next day, the market completely sells off. We had this big 3 or 4 days of big down moves, right? Same thing here, right? Looks like pretty good support, right? Right? Most people will be thinking this is a retracement, and then all of a sudden, boom, gets sold down. So, I could be wrong on this, right? I could be really wrong, but I'm just going by what I've seen in the past. Now, should you avoid this trade? No, hell no. You should be getting involved in this trade, right? Because this is why, right? If you look at this now, right? If I was to enter here, my initial stops would go there, right? That's where my stops would be, right? So that means that my risk is about this much, right? My potential reward, even if I want to be stingy and just take it there, is already 1-to-1. If you look further down, you could be getting a 1-to-4, 1-to-5 risk-reward ratio, right? So that's what I think is happening there, and this is just a false move. This is the trap all the bulls, right? People will be getting there thinking it's going to go up, right? And I think this is what it is, right? Now, the most important thing that I'm going to show you is this. If you look at this chart right now, you're at a glance, right? At a glance, you're looking at this and you're thinking this is a breakout and we're going to see some upside, right? Because you're looking at these candles, you see, yep, it's made a high, retracement, then a high, looks like a higher high, then a retracement, and you get you get a lot of support at this level, right? Now I'm going to show you something else that, I don't always check as often as I should, but I'll show you why. Actually, I'll show you one thing first. So this is the same chart. What I'm going to do is, that chart there, what I'm going to do is I'm going to zoom it down to 1 hour, right? And you will see what I'm trying to show you. So it starts about here. And this is just the daily shrunk down to the 1 hour, so you can see what happened each hour, okay? So the market, right, does this. The up move, we had the sell-off, and then we had the buying towards the end of the day, closed. Then the next day we had the sell-off again, and then we had more buying towards the close to close on a high or equal high, whatever. Then we had some more selling. and then we had more buying towards the end of the day to break above these levels to give it a new structure high, right? Then we had some consolidation, and then the sell-off on Friday, right? Then very late towards the end of the day on Friday, we had the big buying that happened, okay? So that's on the 1 hour. Now, oops. Now, if I go back to the same chart, where is it? Okay, now, I had to delete some lines, but now, same chart, daily. What I've done is I've just marked in these levels here, right? And I'll kind of explain to you what I'm talking about. So, same before, I had the up move. So we had the up move, and then we made a high of 2105.7, okay? But we closed the day on 2103.6, okay? Then the next day we had the sell-off, right? So we had the sell-off and the market made a down move, so made a retracement, right? But then we had the late buying towards the end of the day, and then so forth. And then the next day we had, you know, some up move, but then we continue on, we continued down, okay? Okay. And then late in the day we had some more buying to close at that level. And then the following day we had some continuation to the upside, and we made the market made a high of made a high of 2015.9, which is higher than that high there, right, by 0.2. But it closed at 2105.2, right, which is higher than that close, but lower than that high, okay? So this is what I'm talking about. So if you know anything about how to read whether the market's bullish or bearish or in trend, then you know about the high, low principle, right? Which is, you know, if the market's trending to the upside, then it should be doing this. Higher highs, higher lows, higher highs, higher lows, and so forth, right? How to identify when there's a shift in the trend is when the market makes if it's going up, then if the market's making high highs and all of a sudden it makes a lower high, right? And then we get this candle, this move like that. Now, when it does this, it kind of tells you that there's a potential shift in the trend, okay? And that's what we're seeing here. We're seeing that we're having this up move, this retracement, and then we have this another up move. What seems to the naked eye as being another high, right, is really just a potential shift in trend, right? Now, the next day, which was Friday, we had the sell-off, right? But then we had some late buying towards the end of the day, very late buying, right? And heading back up. So most people are thinking this is just a retracement. We're going to see, you know, some more upside. Now, going back to that 1 hour one I showed you before, disregarding the chart and price action at the moment, but on any other day, if I saw this and I wanted to look for a selling opportunity, I'd be looking for the market to go back up to retest this level here. If it retests that level, we could be a good shorting opportunity to roll over, right? And you know, looking back at this chart here, you can see that this is very deceiving, and I reckon this is not by accident, by the way. This is all on purpose, right? And you might find that hard to believe, but trust me, it is. It's the institutions playing around with the numbers, pushing the market where they want it to go, right? So what you could see here is we could see a complete rollover on Monday or Tuesday, right? Now, I could be wrong, right? Very wrong, but again, risk reward. You know, if it's about building a case for evidence, and I think I've got enough evidence to say that we're going to see the market roll over. Monday afternoon, Monday night, or Tuesday, whatever. Like, I reckon this week it will roll over. If I'm wrong, I'm wrong. Who cares, right? If I'm wrong, I'm only risking, right? If I go back to my risk reward thing again that I showed you earlier, right? If I did show you in this video, I think I did. Right, if I just go like that, zoom it out a bit. Right, if I'm looking at this from a risk reward perspective, and I'm entering there, my stops would go about here. So my stops would go about there. So that's how much I'm risking. My potential reward initially is about that much already, right? Already. There. That's my initial reward for at least if I want to be conservative. You know, if you're looking at targets there, that's already 1 to 4 risk reward. Now, if you're looking at a bigger picture, look at the risk reward on this one. Now, I'm not saying I'm right, so don't take this as trading advice. Just take this as another source of information, or something that you didn't look at before, right? That's your reward. Okay, so I thought I'd show you that before I go to bed, and I'll forget about it tomorrow morning, or I'll get too busy. But I think we're going to see a move here, guys. I think this is enough for me. So hopefully that helps. All the best, and throw your profits my way as well. So yeah, cheers. Take it easy.